dive in. Good morning, everyone, to Marketing Matters. I'm Sarah Touchstone, Landmark Titles social media marketing strategist and educator, bringing you the best in real estate marketing every Wednesday at 10 a.m. We've been doing this for over 2 years now, like Amy and I were talking about, and we love bringing you the most up-to-date content that is out there when it comes to helping your clients, marketing your business, and just being the best darn real estate agent on the block. So I am joined today with Amy Swaney of Citywide Home Loans. She is one of my BNI partners and is absolutely amazing. I could not ask for a better lending partner in this group because she is an outside the box thinker. If there's a will, there's a way. And Amy always has the will and the way when it comes to working out loans for clients in this crazy climate. So she's actually going to talk today about one of the loans that she specializes in and how it can help your clients when it comes to really finding that perfect dream home and making sure it becomes that perfect dream home. So Amy, take it away.
Well, thank you so much, Sarah. I really appreciate the opportunity. And I love that you do this every week. I think that it's a hard thing to come up with topics and content that's fresh and new and exciting for our community. So I really appreciate you letting me come on and talk about this today. So I'm going to share my screen, if that's okay.
Yes, you should have abilities.
Yes. So I'm going to say, do I want to continue? Yes. And I'm going to share that one. And you should now see my screen. Is that correct?
Yes, I do.
Okay, so you're going to have to look in the chat. I do want people to post any questions that they have in the chat so that we can get your questions answered, because I'm hoping that you are going to have questions, because this topic of renovation lending should be on your mind right now, right here in this market. I'm not sure about any of you, but it has been a crazy couple of months after 2 years of insanity. So if I'm going to crazy after insanity, you know it's pretty bad. So we're going to talk about renovation lending today. And the renovation lending has been around for a long time. However, the fact that we're in the market that we're in, the renovation lending opportunities are vast, and no one is really looking at them as a true option that could really make a difference for you and your clients. And we're going to talk about those opportunities today. So I wanted to talk about, first of all, some of the things to kind of review and see, did you know? So did you know that renovation loans, allow buyers to borrow funds based on what the house is expected to be worth after the home rehabilitation is actually completed? So rather than traditional opportunities where we would look at, okay, maybe we do a cash out refinance if somebody wanted to do some renovation to their house, do a cash out refinance, their house is worth $300,000, we'll let them borrow up to 75% of the home's value, and then maybe give them maybe $50,000, $80,000, but that money has to be enough to get the renovation done that they would like to get done. The problem is that what if that's not enough? Then we have to go in after they've used that money and then, okay, reappraise the home, do a new loan, pull more cash out, and we get into this very expensive process where we can use renovation financing and do it all at once. So financing a home, that you have a second opportunity where if you were looking to purchase a home that needed repairs, doing that in a traditional loan is very challenging. How many times is the bathroom not completed? Or maybe you got one of those, homes that needed some work, but you said, oh man, I really want to do this myself and make it, it's got good bones and I can make it what I want. There, repairs right now, they can be expensive, and the property that you're looking at may not qualify for some of the programs basically due to their condition. I get calls all the time. Hey, can you look at this property and tell me if we can get FHA, conventional VA financing on it as is? Because most sellers right now, they don't want to mess with, oh, I've got to fix this and I've got to fix that. We're selling it as is. Can you get financing on it? That can be very challenging. But renovation loans can also be used to refinance your existing mortgage and add in those renovation costs. So you've got all these opportunities that maybe you had not thought of before to really take you to the next level as a market leader and as someone to generate new business for yourself. So let's talk first about what opportunities you have as maybe if you're a buyer or a borrower yourself, or maybe an investor. And then we'll talk about, as a real estate agent, what the opportunities might pose for you there. So as a buyer or owner, you can purchase and make approved improvements after closing. So the loan amount on a renovation loan is actually based on after improved value. So we take, just like kind of like an escrow holdback, we take the property that you're going to buy, and then we take the bids that you go out and get, and we give those to the appraiser, and we say, what would the home be worth if we did all of these changes to the house? And then we take that value and we base our loan amount on that. So if you think about it, if you're doing loans such as a conventional type of renovation loan, you can still do a 95% renovation or a conventional loan on a house that is based upon after improved value. So it's a great opportunity for people. Buyers can also create the dream home without significant upfront costs. Again, if you're doing a conventional loan, that's 5% down and sometimes 3% down if you do the home ready process if you're a first-time home buyer. Then current owners, if they want to refinance, they can actually stay in their homes, make those renovations, paint, appliances, maybe fix up the pool. There's lots of opportunities, and they can actually make those improvements all in one loan while they're living in the house. Now, if the renovations are big enough, depending upon the product, if they need to move out, we can actually finance up to 6 months of mortgage payments into the loan to make those payments while the renovations are being done. It's pretty amazing. So if you need to move out and live somewhere else, you're not having to make those 2 payments. So then you also have the ability to combine the cost of the home and the renovation into one mortgage product, and it allows the buyers to purchase a home that need repairs that are not perfect. So this is a great opportunity for a lot of buyers that don't have that opportunity right now. Now let's look at some of the opportunities for real estate agents. Real estate agents have the ability to, we all are looking at this market where you're getting 20, 30, different contracts on the perfect homes. Those homes that people have already renovated, those homes that have already been completed, those homes that people have just, created to the nines. We've already got those properties where people are bidding hundreds of thousands of dollars over the ask. Well, you can be a real estate agent that's just one of many that are trying to get that offer accepted for your client, or you can open up the market and maybe show your client other properties that might not be that perfect home as is, but you can give them the opportunity and possibly show them what that home could be in their own perfection in their mind, and honestly not be competing against 17 other offers. So you can also, this also allows buyer to buy less sought after homes and avoid those bidding wars. So it helps buyers who previously could possibly not buy a home, because you might be looking in those lower price points with homes that need those renovations. They need to have those things because they can't be financed in their current status. And maybe you've got investors that might want to buy that, but quite honestly, maybe they don't want to take that time to make those homes, sellable, livable, and all of those things. It also sets you apart from the competition by having the ability and knowledge to offer more properties with a much more wide array of loan solutions. And it also helps sellers. If you've got sellers, you can offer this to them, that they can offer to sell their home as is without having to offer those prior to close repair conditions. We're going to talk about those in some of the scenarios. So how do we do this? We actually have 3 product loan types. We have an FHA product that has actually 2 different options that we will go through. One is the FHA 203K, and the other is an FHA 203K Streamline. But then Fannie Mae actually has its own conventional product called the Home Style Renovation. So I want to stop here and say, Sarah, do we have any questions at all that we want to answer?
Not yet. The only ones in chat were just wanting your information, your contact information, which is that we'll make sure to get it by the end of the presentation.
We will get it to you. Perfect. Okay, so let's go back to the FHA 203 standard. This is actually a full-blown FHA renovation product. This is like soup to nuts. You can do pretty much structural and every type of renovation to the home. So the alterations can range from $5,000 to the total value of the property not being more than what the FHA loan limit is. And in Maricopa County, that FHA loan limit is $441,600. So this is for a very specific product below that loan limit of basically $442,000. Now understand, that's the total value of the after improved property, okay? So that's going to limit a lot of properties in, some of the areas in Arizona, but it does help some of the lower price points and some of the borrowers that really need that low 3.5% down payment and are willing to live in some of the areas that the homes do need some of this massive renovation. So it does allow for structural alterations. That means you can move walls. You can actually redo kitchens. You can add square footage. You can do things that you wouldn't be able to do on some of the other products. You can replace plumbing, install wells and septics. I can't tell you how many times we're doing an FHA loan and we run into problems with the well or septic system. Well, we can change that by using this 203K product because we can actually make those changes with the 203K. We can also make changes to eliminate obsolescence, meaning we can bring the product or that home up to FHA standards. We can, if it's an older home, we can remove lead-based paint. We can do all the things that need to occur to make this home fit the FHA requirements. Major landscape work, site improvements, all of those things can be done on this product. And you can also make it accessible for disabled individuals. Again, a great product for those areas of town that are more focused on affordable housing, which is quite honestly a great opportunity to find a niche, because there are places in town in some of those areas where we really need to do some rehabilitation. And in addition, you can actually put in some energy efficiency improvements as well. So that's going to be the full-blown FHA 203K standard. There are some requirements on that product that requires you to work with an FHA or a HUD consultant. But the great thing about that is you can finance the cost of that consultant, and they work with you, with the client, to actually tell you what needs to be done to make sure that it's completed to FHA standards. So that's something, again, you can finance within the cost and still be able to comply with all the FHA requirements. And the good thing is I know that we don't do a ton of FHA loans in this market, but mainly it's because sellers are so afraid that the homes aren't going to qualify for FHA. In this particular situation, you're already dealing with a seller that has a product they know are going to need repairs, and you're saying to them, we're going to pay for those repairs to get them to the FHA standard, and you're not going to have to worry about it. So it's a great opportunity to do that in an affordable housing market. So the next product is FHA 203K Streamline. This is more for the borrower who, it doesn't need wall moving, it doesn't need structural, real structural changes. It's really making the house like somebody wants it to be. It's paint, it's carpet. I can't tell you how many times I get that call. Can we do a decorator's allowance, a flooring allowance? Can we do, the paint and carpet needs to be redone. It's dated. This is the product that you would want to look at for that, because maybe in that particular situation, it doesn't comply with the FHA guidelines. And maybe that's one of the difficulties of why that home's not possibly selling in this market, is because it is dated. It does have a little bit more work that needs to be done. So this is any alterations to the property up to $35,000 in cost. Now on this one, the total loan amount cannot again exceed the max FHA loan limit, $441,600 in Maricopa County. It does not allow for structural alterations, but what it does allow for is remodeling of the kitchen and bath, painting interior or exterior, recarpeting or improving the flooring, pay for completion or repairs identified by an FHA appraiser. Maybe you're already doing an FHA loan and the appraiser comes in and says, hey, the roof needs a little bit of work, or maybe there's lead-based paint, maybe there's something like that. You can switch that over to an FHA or 203K Streamline. You do not need a HUD consultant on this product. You just need bids. You need the time to get those bids done, and then you need to get the appraisal done and have all of that completed before you close. The work does not have to be done, just all of the bids and all of those things have to be done. So appliances, decks, patios, porches repaired or installed, HVAC, weatherization, well repair, again, going back into the well stuff, doors and windows, roofs, gutters, plumbing and electrical, or, you're going back to that accessibility. All of those things can be done with a 203K Streamline. And because you're not doing structural issues, it's going to take a lot less time to find the contractors to put in those bids. Okay. So the final product is what most people are going to end up doing, because there's going to be a lot more flexibility and you're going to have the price point be in much more options in this market. So it's the Fannie Mae Home Style Renovation. It's also the product that not as many lenders offer. So we do offer this product, and we do provide the financing in-house, meaning that we have a division of our company that actually does this specifically. This is all they do. And that's not very common without going directly to a bank. And how many times do you want to deal directly with a bank? So that's the one good thing about this product, is that it's probably the best product out there in terms of sellers wanting to deal with it, but it's the hardest product to get people to do because they don't do it often enough to know how to make it work. So it's the home style renovation product. The great thing about it is there's no limit to the type of property and what funds are being used for, as long as they are permanently affixed to the property. So that means you can use this to do pools. So this is the only product that will allow you to add a pool. But remember that the as completed value has to cover that cost and give you enough value to make sure that you can include that renovation. The program allows the financing of some major appliances. The cost cannot be, they have to be less than 75% of the as completed appraised value. That gives you quite a bit of flexibility, okay? So meaning if your as completed value is $100,000, 75,000 of that can be renovations, okay? Here's the other thing. It can be used on primary residences, second homes, and investment properties. So you can use this to basically fix and flip or fix and hold, because lenders don't love fix flip properties, but fix and hold investment properties. Go out, find yourself a reno property and make it a great investment property. So it also includes manufactured homes. Now, there are some additional requirements that you have to do when it comes to manufactured, but again, getting back into that affordable housing, it's a great opportunity for that. Now, the other great option on this is the borrower can put as little as 5% down on a primary residence, and if they're a first-time home buyer and can qualify, they can actually do a home ready loan with 3% down. So it's a great product if you've got the ability to find a seller to work with you on this product. Now, I'm going to give you a couple of scenarios before we go into the process. And these scenarios, I hope, will kind of generate some ideas and some questions that you will think of, how can this help your clients right now? So I'm going to give you the first scenario that says, Jack has found 2 homes that he likes. The first home is perfect, fully remodeled, close to his work, but it already has 6 offers on it, and the listing agent has said, we have to have the highest and best. Maybe, and I'm not going to lie, this may have been the last client that I just had. So, so the listing agent said, you have to have the highest and best, and the agent has already mentioned that all of the offers were well above asking. So Jack doesn't have a ton of extra cash to, do the appraisal waiver, to do the whole, I'm going to just keep jacking up my price. He's got great income and he can afford the payment. He's just short on the cash. Okay, so he's getting concerned with that. But he also likes a second home that's in the same neighborhood, so it's still close to work, and it's being sold after the owner who had lived there passed away. It was an older woman who had passed away, but the property had not been updated since the early 80s. And it appeared to need a new water heater, new AC, and possibly, they weren't quite sure, but it looked like it possibly needed a new roof. So the agent said that this listing agent said that the seller lived out of state and wanted to sell the home as is because the seller had passed down to his son and he just wanted to get done with it. He was already upset that his mom had passed away. He didn't know anything about the house. They already had somebody that had fallen out of escrow because the buyer, when they did their inspection, found out that the roof was going to be quite expensive. So this was the scenario. Now, client calls me and says, you know, we aren't going to get the property that's highest and best. He just doesn't have this cash. He's looking at possibly this other property, but is concerned with that roof. And obviously, he's a single guy. He's not super excited about having to do, living in grandma's house that she hasn't changed anything since the 80s. And, and she asked me, she's like, look, we've been working with this guy for 6 months, doesn't want to lose the client. Is there anything I can do? And this was what I suggested. So I said, look, he went in, he offered $400,000 on the second property. He gets the bids for $92,000. And that included new paint, a new kitchen appliances because they were kind of dated. He included a new AC unit, which was not cheap, by the way, water heater. He got new bathroom fixtures, all new carpet, some new and fancy lighting features, and he was able to also include the repair of the roof, which was very expensive because once the roof inspector got in there, there was actually much more damage that needed to be fixed than even the initial inspector had thought. So Jack was able to add in a 10% contingency reserve to the cost because we require that just in case, I don't know, you might have seen the prices increase on some of these things. So we add in a 10% contingency reserve. And since the seller knew that the repairs nor the value would be an issue, Jack was able to still put the minimum amount down, not waive the appraisal contingency, because again, the seller wanted to sell it as is, didn't want to deal with all those issues, knew that if he put it back on the market, he had absolute knowledge that these things were an issue, that he would have to disclose them in the SPUDs. And so the seller's agent, the listing, and the buyer's agent worked together, came up with the fact that yes, they would do a 60-day close, and Jack was able to get all of these bids put together. We put them together for the appraiser. The home ended up appraising for, I think, like $500 and some odd $1,000. And we were able to do all of we did the valuation based on the $400,000, 10% contingency reserve. We financed in all the extra costs that we had to have, plus the $92,000. This was probably, because the other home was about $75,000 more than this because of all of the repairs they had done. And so the seller was happy because the loan closed without the fear of losing another buyer to an inspection. The buyer was happy to get the exact home he wanted without having to overpay and having to come in with all the extra cash and worrying about that appraisal gap that he might have had. And the agents were happy because the loan funded prior to the completion of any of the repairs. And quite honestly, the buyer's agent was happy because the buyer didn't give up and go back to renting for another year. So that was one scenario.
That's a really great story, Amy.
Yeah.
It's pretty awesome.
Well, and I hope that kind of generates some ideas of some of the agents on the call. Does this sound like something that might work for some of your clients? I would love to hear if that might work. So I'm going to let you guys think about that while we go to scenario number 2. So Steve and Bella are finally under contract after making, no kidding, 18 offers. Okay?
This is a real story too.
Real story. Okay, 18 offers. Been working with them for literally a year. Okay, so if we think about this, if I've been working with them for a year, my price point started over here is now over here. Okay. And they were literally under contract, finally so excited to have this house. They were so excited. The house looked like it had been renovated. It was one of those, somebody went in, flipped it around, put a coat of paint on it. So it looked great. They went in and got the inspection done back, and then they saw all of the work that needed to be completed. Again, these are first-time home buyers, right? So the seller, who was an investor, okay, did not agree to make any of their repairs, okay, and was threatening to put it back on the market because, of course, he can resell it to all the 17, well, this wasn't, there was 5 or 6 other offers on this one. But again, the inspection showed some severe issues, possible issues that came up, especially, and that spooked my first-time home buyers. Well, they still loved the house, really because of sentimental reasons. It was in the same neighborhood of a couple of their friends. It was close to ASU, where they're, relatively close to ASU. So, I mean, they really did love the house, but were totally defeated, now that they've spent this money on another inspection, okay? And they just felt like their only option was to cancel and hope that another house came on the market, right? So rather than do that, Stephen Bella's agent goes out, because they have a licensed handyman that they work with, and they went out and got bids based upon these inspection items. They made a couple of calls. They come back, this agent came back to Stephen Bella and said, look, these are the items that need to be completed, and let me see if I can negotiate with the listing agent to extend our close of escrow that was a 30-day close of escrow to a 60-day close of escrow, explaining to the benefits of the seller that if they stick with this client already knows all the problems, and they love the house, and they are willing to still pay the cost of having these repairs done. Now, if the seller puts it back to, or goes back to one of the other offers, they may not have that opportunity. Again, bird in the hand versus, what they're going to possibly get when another inspection is done, correct? So, and I'm just going to throw this in as a side note. I will tell you, for every accepted contract that I get, I would say at least 2 of them drop out because of the inspection, because they're paying top dollar, often over ask, often with waiving the appraisal. And once those things are done, the inspection is what always kills the deal. And that's why you're seeing offers going to the next one, to the next one, to the next one. So that agent was able to work with the listing agent, tell them the buyers are willing to pay all of the costs to have those issues completed. And then the agent went back to Stephen Bella and they said, look, here are the inspection items. It's $25,000, but guess what? Remember the things where you wanted to do new painting and you were hoping that you could have maybe the seller pay for some of your closing costs before they realize there's not ever going to be a chance that they can do that. You wanted new carpet, and maybe you wanted some new appliances, and you were trying to save some of your money to do that. Here's some bids that we can actually include the additional $10,000 to do paint, carpet, and get some of those upgraded appliances and include that in our renovation loan. Go to 60 days on the closing, get all of this done, have all these bids ready, We go back to the appraiser. Now, what is this home worth based upon all of these things being brand new, all of these things being repaired, and now you have a home that's worth even more than what you're paying for it. And we can still do 5% down based upon the new value of all of these things, because that's a lot less expensive than having to come in with another $10,000 to do the things that they wanted. They were thrilled. They were so excited. They were incredibly thankful to their agent for coming up with a creative idea to get this transaction completed. Now, again, a first-time home buyer, I will tell you, it's a lot more complicated of a transaction, but it got done and everyone was happy at closing. So these are the opportunities that you have to utilize this product in a market that is limited with properties. There are properties out there, just not the ones that everyone is jumping on. So just to give you an idea of, okay, what is the actual process? So the borrower gets pre-qualified for a traditional loan. They go shopping. They find a home that maybe needs some updating, maybe needs some repairs. They get a purchase contract accepted. You do want to try to get a 60-day closings. We can probably get it done in 45, but if you have, the problem with that is that contractors are so busy. And so getting someone to actually go out there, give you a bid, and get all those things done, depending upon the depth of what needs to be done, I would highly suggest trying to get a 60-day closing. So during the inspection period, the buyer hires the contractors to go out and give you bids for all the work to be completed, and then do a work write-up. So you will need probably a general contractor that's going to, depending upon which product we're doing, to do a write-up of, okay, this needs to be done, this needs to be done, this needs to be done. And basically it becomes your cost breakdown. We take that cost breakdown, we add a couple of things in for us, things like additional fees, additional costs that come up with, like there's additional title updates that have to be added in. There's additional inspections that have to be added in that are draw inspections, because we're going to be doing draws to the contractor for completed items. And then we're going to do contingency reserves of a 10%. Plus, if the buyer has to move out of the home because we're doing massive reconstruction, then we will have to do, we determine how long and possibly do up to a 6-month reserve for that. So we come up with all of the costs, we do a cost breakdown, and then we order the appraisal with that cost breakdown included in addition to the purchase contract. The appraiser does basically it's not an as-is appraisal, it's a to-be completed appraisal. So they take into consideration all those things that are going to be done, just like they would on a new construction. And they say, this is what the house is going to be valued at once all those things are done. The loan is underwritten, closed, and funded per the loan that we are doing, whether it's FHA, conventional, anything like that. We're going to do that loan and underwritten and funded based upon those guidelines. And then once we've funded the loan, then our construction team takes it over, and the contractor works directly with the construction team to do the draws, to do to get paid, and all of the inspections are done to make sure the work is completed as addressed in the initial bids. And that basically is the process. So Sarah, are there any other questions that anybody has? Because that is what I have for you.
That was awesome, Amy. Like that was a lot of really, really good information. I know for me personally, I'm buying another home this fall and I'm like, okay, maybe this is the way. I don't hate this idea. I've bought fixer uppers before, and so the process is familiar, but in a market like we have right now, of course, I'd love a nice turnkey, perfect house, but
Right.
if there's more available, then this looks like a really great program. So does anybody, oh, go ahead.
Well, I was going to say, it's funny because I am actually about a month away from doing I have a stepson, and he and his girlfriend are rents right now are just ridiculous. And so we're at the point now where my husband and I are going to be basically doing what's known as a kiddie condo. And that product is where we co-sign on a loan for our children. They will satisfy the owner occupancy requirement. So they're going to live in the property, but we basically qualify for the home with our credit, with our income, and we will be giving them some of the down payment. They will be living in it, but because of that, they're willing to live in some of the areas that maybe we aren't going to be living in, okay?
Right.
And at the price point that they need, some of these homes need some work. And it was funny, I took them to dinner. My husband was out of town, and I took them to dinner on Easter, and we actually discussed this product and they were super excited because it opened up the idea of, because what they're looking at in the price point that they can afford doesn't give them the things that they need. Yes, we can get a 2-bedroom, pot, or a 3-bedroom, 2-bath house, but it's dated, and the kitchen is like this, and some of these things allows us to go in and maybe move a kitchen and open up the lower what are they, the drop ceilings, and maybe open it up and not have to come out of pocket with that cash, in addition to have to pay those appraisal gaps that are so prevalent in the market right now, because we're going to be meeting those appraisal requirements, because we're going to make the home a much better home when we get the market, or get those repairs completed. So you can use these products with other opportunities that we already have, and we might not be thinking through.
Yes.
So,
well, it's a good program when those of us in the industry are like, I think I could use this personally.
Exactly. I mean, it really does offer, some great opportunities. And if you just start thinking about, when could you use this? Are you getting repairs out of the blue? Are you getting, because really the extra time is only needed to get the contractors in for the bids. Because, like I said, some of the products are going to require a general contractor to assign out those things, and they are very busy. So
yeah, they are. Yeah. So if you are interested in this for your clients, definitely make sure you've got some general contractors that you love working with that are going to make your clients a priority as well. So Amy's contact information is on the screen. Amy, if you could please put it in the chat as well, that would be awesome.
Absolutely.
And then if anybody has any questions, please let us know. We'll go ahead. I'm going to wrap up today's presentation with a few classes that we have coming on. So if you do have any questions, please put them in the chat or question and answer. Tomorrow, we wrap up our spring CE series. So we do a series in the fall and the spring on Zoom CE classes. If you join us for all of these CE classes for the spring and the fall series, guess what, guys? You will get all your CE credits done within a year. So please join us tomorrow. We're doing employment agreements. We have Butch back on as well. He's great. This is a fun, engaging class. There is still some room to register. So if you need the link, please let myself or your business development manager know. This goes off at 10 a.m. tomorrow. And then our very own Mary, she is doing a Buffini class. If you guys don't know about Buffini, reach out because it is a great avenue towards really building a successful business model. Buffini has been used for years and years and years in the real estate industry for, like I said, just diving in there and really building on what you're already creating. So she is going to start a Buffini mastermind class, starts next Wednesday. So if you're in the Central Phoenix area or South Scottsdale area, or Biltmore area, let us know. We'll get you hooked up with Mary. This is a great class. I never hear anybody take a Buffini and be like, oh, that was a waste of time. It is absolutely not. And then Melinda's got a 1031 exchange class and happy hour. We love putting classes and happy hours together. This one is going to be Tuesday, May 3rd in the afternoon, starts at 2:30 and goes till about 4:30. This is also going to be in the Biltmore area at the Fairway Mortgage office off Camelback Road. So if you would like to register and attend that, please let us know. 1031 exchanges are incredibly popular with all the out-of-state people that are coming to Arizona with money. A lot of them are using 1031s, so definitely make sure you're educated in that so you're working and giving the right information to your clients. And then another Fairway partner is going to be hosting a Realtor Toolkit Summit. This is going to be Wednesday, May 4th. May the 4th be with you. And this is going to be over in Chandler. So we're going to do a HomeBot presentation, total expert presentation, and we're going to do some custom made GIFs. So please join us for this. This is going to be great. It starts at 3 o'clock, goes till 5:30 on Wednesday, May the 4th. And that's about it for us today, guys. So thank you so much for being on. Amy, that was great information. I'm really glad that when I was like, I need people to speak on it, you were like, I got a presentation, because that was such good information. And then, of course, thank you to our business development managers, Beth, Becky, Melinda, Mary, Patty, Michelle, and Prescott, Michael, and Tom. I got to make sure I have an updated slide with him, and I always forget until I'm at this presentation, but he is in our Scottsdale Kierland office. And then, as always, thank you to Landmark Title for allowing us to bring you great content like today on Marketing Matters every Wednesday at 10 a.m. And as always, we have 7 offices across the valley to service you, as well as one up in Prescott. I was actually up there yesterday doing reels for the Prescott office. So if you've got any business going down in any of these areas, we'd love to help you on your next title and escrow and wrap that contract up and make it a great experience for everyone. That's it for us today, guys. Thank you. Thanks, Amy.
Thanks so much, Sarah.